Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by Delta.Exchange. What a fantastic day yesterday for us. Nifty rallied more than 300 point at some point of time, but finally it came down slightly. The same thing yesterday when we closed, US futures were higher, but then, from there, it has fallen 1.5% nearly, S&P 500. Then at the end of the day, they recovered entire 1.5%. So that means a 3% move in US. So US market is like that. Indian markets are far better for traders, right? US markets is very, very volatile. So because the US markets fell about 1.5% yesterday night in the first half of the session, the GIFT Nifty nosedived by about 130, 140 points. But now the entire loss has been recovered. Now GIFT Nifty indicating about 20, 30 point higher opening. So now the question is, what is next? Is the worst is over? As I told you earlier, the Nifty tried to test 22,000 many times and it took support, and now it did not break. On intraday basis, one day it went below, but within few minutes it has recovered. So once it has recovered significantly, we can consider that as a support for the short time. Now you can consider that as a support for the long term, at least if the first resistance is taken out. So the first resistance is 22,500. So until 22,500 is taken out on the higher side, so the danger of breaking 22,000 is there already. So one day there is some good news from US, market goes higher and we go higher here. The next day if there is a bad news there, the market will fall here. When it comes to institutions, both FIAs and DIAs are equally fighting. So therefore, the third force, retail people, if they join with FIAs, then market falls. If they join with the DIAs, market rises. Last 2 days, I think it's mainly because of the retail people. Why I'm saying it's mainly because of retail people? If it is because of institutional people, then the general rule is that the large cap will have to go first, higher, then only the mid cap and small cap will have to follow. That is how traditionally the markets have been behaving. While falling is always large cap fall first, then mid cap, then small cap. And large cap will fall less, mid cap and small cap will fall more. On the way of reversal, the large cap will reverse first, and then only the mid cap and small cap. And when the recovery continues, the probably mid cap and small cap will give a move much higher than the large cap. But what happened last two trading sessions? The day before yesterday, the Nifty did not recover at all. Nifty closed slightly negative, but mid cap and small cap rallied. So yesterday also, the Nifty rallied about 1%, 1.5%, but mid cap and small cap rallied even more. So that is not, that is a behavior, expected in a bull market, not during the reversal. During the first reversal, large cap will have to lead the rally. So that is why all this suspicion, So for the time being, for the next few trading session, we can say it is indecisive. Market may be stuck in the range 22,000 to 22,500. So if 22,500 is taken out, the next resistance will be 22,800, and 22,000 can be taken as a good support, very good support. Right? So on the other hand, if the market falls, breaks 22,000, and then, the same old story. So every support is being broken in a downtrend market. So stock wise, there are some news like TCS is having some news, Wipro is having some news, stock specific action may continue, but otherwise it will be just overall what FIAs are doing and what domestic institutions are doing. So if so far, even in yesterday's kind of market, FIA did not stop selling. So for them, there is no reason for them to stop selling. So they might continue to sell. So therefore, although market is indicating a opening 20-30 point higher, but many times this GIF Nifty indication has been wrong. The best example is yesterday, indicating 60-70 point gap down, but market went up more than 300 point. And yesterday morning, I don't know how many of you observed this. You just watch the pre-market session. Within the first few seconds, if Nifty is showing 600, 700 point gap down, then probably that day the market will shoot up. And what this is the trick by some operators, just showing a very big negative in the pre-market. So they bring the retail people mood to negative, and then they start covering their shorts. So the same way, if they're showing like 600 point, 800 point green, then probably that day they are planning to bring the market down. So some big players, if they want to exit their position, so in the pre-market, so they create an opposite, picture, so that, other people don't come and buy or sell along with them. So yesterday, the 600, 650 point gap down I saw in the pre-market, I had a suspicion that this market will go higher. So anyway, like this is just going to be a consolidation. And yesterday, day before yesterday, the huge call rating was seen at 22,200, 22,300. Yesterday, the way market rallied, so they all had to run for cover. So that made market move much higher. And today also, but today there may not be a big problem, because like today the positioning is better. So 22 150 put option and 22 550 call option. So they both are trading at a decent premium, like 20 to 100, not 20 to 150. So 22 550 is about 200 points away. 22 100 put, which is 250 point away. In fact, the put premiums were higher than the call premium. Call was trading around 10 rupees, put was trading around 15, 16 rupees. So most of the people have done that. So, so they're expecting, along with the premium collected, so they will not be in a trouble if Nifty closes between 2250 and 22,600. So even 22,500 itself is going to be, a stiff resistance as far as I'm concerned. So if 22,500 is taken out, then the first days, you have to watch for the first day candle last Friday. So if that high is taken out, then so probably the worst may be over for our market. Then you may say, sir, what about this Trump tariff, this and that? Like only first time when things come, it became a shock for the market. Then after that, people get used to it. And now, people by this time understand that, you can't trust Trump. He can talk anything. Like one day he say 25% tariff. Then next day he say 1 month hold on. Then he say, no, we are not going to stop. We continue. The next day, Treasury Secretary talks something. Yesterday, now they say for automobile, they are putting 1 month pause for that thing. And now they say no negotiation. Now they say negotiation, So every alternate days, he speaks, something opposite. So once the people get used to it, the markets won't be reacting for Trump. Markets will be looking for some other factors to follow. So that is how the stock market works. Even the coronavirus also, the first wave came in 2020, Nifty fell 40%. But the second wave of corona was more deadlier than the first wave. But still the market did not fall much, not even 10%. So that is how, when first time when things come, it became a shock. Then after that, people get used to it. So I'm not saying that market will rally, but at least the market might be bottoming out around 22,000. So let us see what is going to happen. So hope you enjoyed watching this video. Thank you for watching.